Israel bombs Tehran. That's the big overnight news, and you can see how the market has sold off dramatically. This was the close from yesterday, and you can see that overnight move about 100 S&P points. But you can also see that the market has been able to recover about half of that move. In general, wars do not have more than a temporary market impact. You can take a look at the Ukrainian war. You can take a look at the wars over the course of the last 20 years. They don't have a lasting market impact. And there's been conflict in the Middle East since the beginning of time. Obviously, during the course of the last 2 years, they've been at war. Is this really new? Well, yes, Israel bombing Iran is new, and we can expect retaliation from Iran. Oil prices are going to move higher. Gold prices are moving higher. So that's a given. Are those moves going to be good to join right here, right now? I think that they're going to be a bit overextended overnight, so I wouldn't chase those moves. I'd wait for pullbacks and see if you can buy a dip in them. And from gold's standpoint, gold has been moving higher anyway, so I think that's a decent trade to look at. How am I going to be trading today? I'm really not going to be trading aggressively. I may trade the long side if I see this gap fill very quickly. And I've got stocks like Microsoft that have been really strong. But there's a more important point, and that is that this move is going to allow me to gauge the market bid. What the heck does that mean? I want to see how aggressive buyers are, because that's going to tell me how close the market is to a top right now. So we had some news this week, and that was a pretty big tell for me. And I'm looking for warning signs, constantly looking for warning signs. I believe that this market rally is nothing more than a bunch of fluff in here, and that it was mechanically generated once we got through this level with all the trade talks. If you took out all the tariffs, we're not going to have any tariffs at all, was not a factor, and everybody was playing nice in the sandbox, I still believe that the market would be right about where it is right now, except we wouldn't have had this volatility, and we would start to see a gradual descent. Why? It's because of the macroeconomic backdrop. It is definitely deteriorating. I'll get into more detail on this Sunday. I think that we are only a week or two or three away from starting to see some serious market selling pressure. Again, I'll get into all those details, but I want to show you a tell that came through this week. And I'm going to go into the 5-minute chart, and we're going to take a look at the price action specifically on Wednesday. This is what the market did Wednesday. We had a very low CPI number, 0.1%, and the market rallied on the news. But we also had a China trade deal. Manufacturers in the U.S. have been desperate to get rare earth minerals. We are going to wait for those shipments to actually be received, and then the U.S. is going to perform on their side of the trade deal. China is also desperate to do a deal. So this is the news that the market's been waiting for. This is the second largest economy in the world. This should have been a go-go, gotta have them moment. The trade deal is done. Yay! Well, what did we see? We saw a little early rally and then a big decline. Sell the news? Yeah, I think so. China's tariffs are going to go up to 50%, or they're going to stay at 50%, I should say. Ours are going up 10%. China's going to start charging the U.S. 10%. That's not a very good trade deal. That's pretty dang restrictive, if you ask me. And the rhetoric, although they're going to put a positive spin on it, has been fairly heated between the two countries. We're not seeing any other trade deals around the world either. Yeah, we're in talks. Yeah, we're in talks. Yeah, we're in talks. Well, talks could mean that we couldn't reach an agreement and we're going to impose 25% tariffs on everyone else. Those timelines and deadlines are coming up. In general, right now the market got good news. PPI came out Friday, lower than expected. Initial market rally and then nothing. This should have been the news that fuels a move higher. Yes, we can expect some trade deals with some of our trading partners over the course of the next few weeks. The big, beautiful bill. That is a potential catalyst as well. That cuts taxes, and that is stimulus. You put money in people's pockets, it's going to stimulate economic growth. It's going to be good for the market. So I'm waiting for that to get passed. That's really the last good big piece of information. And I sense that buyers and sellers are aware of the macro backdrop and that they are starting to get very cautious in here. That's why we're not seeing stacked green candles for the market. We're seeing this gradual drift higher, this wimpy little move right here on very light volume as we try to challenge the all-time high. You can see the volume here is very, very light. And this is not a go-go, gotta have a market. Look at all these red candles in here. Constant retracement, all these dojis. If this were the moment the buyers are waiting for, and if they felt urgency, hey, I'm not going to be able to buy here at this level again for a very long time, you would see stacked green candles, just relentless buying, and we would blow through that all-time high. That's not what we're seeing. We're seeing very tenuous price movement. This right in here was, in my opinion, all mechanical on that initial China trade deal news. We had this big melt up that forced a lot of short covering. That's where the move has been coming from. But right now, we're starting to see the bid weaken, the bid soften. And you can take a look at England's GDP number yesterday, minus 0.3%. There are tells across the board that economic conditions globally are continuing to deteriorate and that they're starting to spread to the US. So this news overnight that Israel bombs Tehran is going to allow us to gauge how aggressive buyers are. What is their appetite for stocks right now? If we see the overnight gap fill instantly with just snapping this thing up like crazy, it tells us that buyers are still very interested. If I don't see that type of pressure, that type of buying pressure, it tells me that they're very cautious. And let's take a look and see what the market's been doing. You can see we're continuing to grind higher. So this news is currently being discounted, but I'm watching for those long stacked green candles. And if I start seeing a lot of selling pressure, it's not because of the war. Again, these have a very temporary impact on the market. Any kind of pullback, any kind of decline is going to be related to what we're seeing in the macro backdrop. And I expect to see more earnings warnings over the course of the next 3-4 weeks. We need to get closer to Q2 earnings releases. That probably won't happen until July. We also have in July the deadline for the tariffs, and we've got an FOMC statement next week. I'm not expecting anything new there. I'll go over all this on Sunday. So use this opportunity today to observe. This is our chance to see how aggressive buyers are. And we'll know if this market has a chance to float higher for a few more weeks this morning. And we're going to be watching for lots of volume and immediate stacked green candles into the gap. If we get that type of price action, it means that we probably got a few more weeks of upside. If we start seeing a lot of choppy back and forth, testing of the bid, starting to come down and test last night's overnight low, that would tell me that buyers are not that interested. So use today as an evaluation. And again, if we do see those stacked green candles, Microsoft has been a really nice stock. Take a look at that daily chart and you can see how strong it's been recently. So any little dip today should be quickly absorbed. That's an opportunity I'll be looking at. Good luck with your trading. We'll see you Sunday. Thanks for watching.